In this episode of What's Working Now, we are going to talk about how money generates revenue. You cannot become wealthy by exchanging your time for money. No matter how hard you work, there are only so many hours in a day, and you will not be compensated for the time you spend on rest, sleep, and other activities. What if there was a faster way to wealth? What happens if your money could work for you? What if it was the perfect employer? It doesn't need sleep breaks or a salary, so it is constantly hard at work making more money for you round the clock all year long. Fortunately, there are many ways your money can be put to work making money for you, and while you put in your 40 hours of work every week, your diligent dollars continue working non-stop. So in today's video, we will share with you 6 ways money makes money, but before we do that, let's look at an account with a high rate of return. A high-yielding savings account can serve as a haven for your money before deploying it to more profitable but riskier ventures. High-yield savings accounts are FDIC insured and typically pay 20 to 25 times more than traditional savings accounts, allowing your money to generate more money while you wait to be called or perform other duties. Let's say you have an extra $10,000 and aren't sure how to get it to make money for you. Keeping it in a high-yield savings account that offers an annual percentage yield of 2% will yield $200 in a year, which isn't a fortune. It's better than leaving it in regular savings or checking account that offers about 0.1% interest. You might as well keep your cash under your pillow, as in every financial PLA, your emergency funds are better kept in a high-yield savings account where you can easily access them when the need arises. You can easily open a high-yield savings account where you already bank. However, online banks typically offer the highest rate. They keep their costs down by minimizing physical locations and can pass this cost efficiency on to their customers. Before we get into the second strategy, by the way, get your finances in order and live the life you deserve. Retirement funds. The 2 most important retirement accounts are 401ks and IRAs. These are investment accounts in which your savings are invested in the market with the promise of exponential growth. A 401k is an employer-sponsored retirement account. It is ideal for people who lack the discipline to save money on their own because the money is deducted directly from their paychecks. With the 401k, you invest pre-tax dollars. This means that your taxable income for that year is reduced to maximize your 401k contributions. When you've established your emergency funds, begin saving as soon as possible and as much as you can. The next goal is to maximize the 401k's tax efficiency and get your money into the markets so it can start making more money for you. If your employer matches your contribution, go for the maximum limit so you don't leave any money on the table after you've maxed out your 401k. Begin putting money into an IRA, independent retirement arrangement, or Roth IRA. Roth IRA. Traditional IRAs and Roth IRAs are retirement accounts that you open and fund yourself. The difference between the two is that with a traditional IRA, you contribute pre- or after-tax dollars. Your money grows tax-deferred, and withdrawals are taxed as current income after the age of 59.5. Whereas with a Roth IRA, you contribute after-tax dollars and your money grows tax-deferred. Your money grows tax-free, and you can make tax and penalty-free withdrawals after the age of 59.5. The IRA and 401k aren't the only retirement savings plans available. Simple IRA plans are another option to consider. Employee Savings Incentive Match Plans, SEP plans, payroll deduction for employee pensions, simplified profit sharing plans for IRAs, HSA, Health Savings Account, PSPS. These funds in retirement savings are typically invested in mutual funds, CDs, ETFs, stocks, bonds, and other financial assets. Regardless of the retirement plan you choose to grow your nest egg, it makes sense to start early. Starting early allows you to leverage the power of compound interest to reinvest and earn from your earnings, essentially creating a snowball effect that exponentially grows your money. When you have made the maximum allowable contribution to your retirement plans, your initial investment will have compounded to approximately $90,000 in the stock market. You should consider investing in the stock market if you want your money to make money for you, but avoid market timing or day trading, which is trading stocks to take advantage of favorable market fluctuations. You're better off with a long-term investing strategy, also known as a buy and hold strategy, which is a conservative approach to investing in which you buy a security such as a stock, mutual fund, bond, ETF, and so on and hold it for a long time. As a long-term investor, You will hold on to your investments in the hope that the sector in which you invested will have grown significantly in the future. You will ride out whatever new development arises over the period in the hope that your investment will have yielded a reasonable return, and with time the fluctuation should even out, resulting in an overall gain. A $10,000 investment would yield $25,937 after 10 years. Even better, if you add $5,000 to your portfolio each year, your investment will grow to a whopping $105,624 in the same period. If you don't have the time or expertise to manage your portfolio personally, there are now robo-advisors that can automate your investment portfolio using advanced algorithms. Betterment and Wealthfront, for example, will create a customized portfolio based on your goals, risk tolerance, and other preferences. They will provide you with a diversified portfolio comprised of multiple funds to reduce your risks. Index funds and individual stocks are two other ways to invest in the stock market and have it generate more money for you. Real estate investment funds and target date funds. Real estate is one of the basic human needs, and the demand is always there. So putting your money in real estate is a great way to get it to make more money for you. You can invest in either residential or commercial real estate. Rental income and appreciation. When you invest in real estate, keep in mind that property appreciation is fast-tracked by location improvements and development. Location is the most critical appreciation factor for a residential property. When facilities like transit routes, shopping malls, schools, and leisure facilities spring up around a neighborhood, the value appreciates significantly. The second way to profit from real estate is through rental income. Your tenants pay a fixed monthly amount known as rent, which applies to both residential and commercial properties. Let's look at some of the practical ways you can start earning money from real estate. Flipping is the process of purchasing a property, improving it quickly, and then selling it. To make money from flipping properties, you must have an eye for viable properties, be able to easily determine the underlying cost involved in improving the property to the desired level, and be able to fix them up yourself or hire a renovation firm. Buy and hold is when you buy a residential or commercial property and rent it out. You can manage the property yourself or hire a management company to take the stress out of being a landlord. You can make money by renting out a house or room on a short-term basis. Companies like Airbnb have made it simple for homeowners and property investors to profit from this by catering to travelers. This is especially profitable if your property is located in a well-known tourist destination. The demand for such arrangements is high because many vacationers prefer to stay in hotels. Real estate crowdfunding. This method of investing in real estate is ideal for those who do not have easy access to capital. Traditionally, investing in real estate required a significant amount of money, making it the exclusive domain of the wealthy and those with access to financing. However, in recent times, crowdfunding real estate deals have taken off, involving the process of pooling resources together to invest in real estate, with the best part being that you can begin with as little as $100. There are numerous real estate crowdfunding platforms where you can own a high-value piece of property with a single tap on your smartphone. Starting your own business can provide you with a lot of money, but it is not without risks. If you can't stomach the stress of getting a business off the ground, you can be a silent partner by putting down your money in someone else's venture. You won't have control over the business's daily operations, but if all goes well, you will share the company's profits without breaking a sweat. Another way for your money to work for you is to increase your value. Invest time and money in improving your marketable skills, and you will reap financial benefits in no time. Look for certifications and professional degrees that will make you a high earner and highly sought after in your industry. It doesn't have to be expensive, nor does it have to be 4 years at an Ivy League university. Many online courses offer you an opportunity to further your education at a reasonable cost and get certified in your interest areas. Thank you, guys, so much for watching. If you like this video or think it would benefit a friend or someone else, please share it. Also guys, please do me a favor and click on the bell icon and enable notifications if you're a subscriber. If you're not, well, welcome to the channel and I hope you do subscribe and enable notifications. With that said, thanks for watching and I'll see you at the next one.